Good day, everyone. Legendary trader Jesse Livermore was known for his quotes about the stock market when it came to trading. He wrote the investment classic of classics, Reminiscences of a Stock Operator. And one of his more famous quotes is, it's never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were right exactly at the right time and began buying or selling stocks and prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon, unquote. Well, the key for this quote to work is that one's got to be in a bull market cycle. Stock markets and crypto markets can have massive drops during bear markets. For example, 2000 to 2002, after the dot-com bubble burst, the NASDAQ composite lost 78%, peak to trough. Bitcoin itself has had two corrections of 94% since 2010. And an 80-something percentage correction in Bitcoin is pretty standard during Bitcoin bear cycles. But due to its exponential price growth, it remains the leader in terms of price appreciation of any instrument in the history of speculation, even if one were to examine hundreds of years of market data. The crypto market remains fairly clean, so the metrics I've been using, and they're, of course, like anything, they're organic, so some become more important in time and some become less important. But so far, they've managed to call every major top and bottom in Bitcoin since 2011, and in real time since 2013, to within a few weeks of any major top or bottom. So that means sometimes that getting out of a 50% drop off the peak is pretty typical, but that occurs after a typical tenfold or greater run-up. So even if that would be the worst case scenario, you're still left with a massive gain, and a fivefold. That's a 500% gain if you sold at a 50% drop off peak, where Bitcoin had rocketed higher by at least tenfold. Now, the price history of Bitcoin shows that in each bull cycle, Bitcoin has gained at least a tenfold from the prior price peak. A 50% correction is orders of magnitude better than a 90% correction. So to break even on a 50% correction, you need 100% gain. But on a 90% correction, you would need a 900% gain to get back to normal. The logarithmic price plots therefore make far more visual sense than linear price plots when it comes to instruments that exponentially rise in price. Enables the chart eye to see corrections that might be out of the norm. Of course, despite a solid track record in terms of timing the major tops and bottoms in Bitcoin, past results are no guarantee of future results, since the only constant when it comes to markets is change. While the odds remain on our side, the crypto market will get noisier as more institutional hedge funds jump on board with their trading algos, but such tend to be more short-term oriented to typically within days, if not minutes. So it should not affect my own position trading. It'll affect it to a much lesser extent in both stocks and ETNs, such as GBTC, which of course tracks the price of Bitcoin. William O'Neill himself typically used the 50 and 200-day moving averages to guide his trading, which meant he was unaffected by short-term trading styles, which produced significant trading volumes. While most traders like to use the 10 or 20-day moving averages, as they obviously will get you out of your position sooner, O'Neill's 50 and 200-day moving average sell rules kept him away from a lot of the short-term noise. And he was also running a sizable sum of money, so getting into and out of stocks would move the price. Keeping a longer-term time horizon enabled him to sit with positions longer, thus trade less. And he consequently scored major gains in stocks by sitting in the winning ones, often for many months. Big gains in just a handful of stocks is largely responsible for his long-term track record, which goes all the way back to 1958. Quality over quantity. In a bull market, he may start with several stocks, as he writes in his investment classic, then pare the list down to the top 3 or 4 performers, so he could put all his focus on just a few names. Of course, that's what he says in his book. In practice, it's a little different, but suffice to say, the longer his hold times were in some of these stocks, and that meant sometimes enduring deep corrections, all the way down to a stock's 200-day moving average, and therefore a stock he owned long-term could lose easily a third of its value before finding a major floor. And stocks like Price Club, Amgen, Walmart, Costco, those are a few of many such examples. I think his hold, when he explained the story to me on Walmart, I think he held that thing for 3 years, and he had to sit through a bear market, but it never hit. He talks about it in a way like it's a great memory because it came to within, I think, 2% of his absolute sell stop, but it never hit, and then that was the bottom of the bear, and then everything righted itself, and his stock was, I think, also one of the first to restore the losses, and then he rode that out to the hilt. Now, in the current bear market, current market of near limitless liquidity, we've got a number of stocks that have benefited from using longer-term sell rules. My 7-week rule uses the 50-day as the main selling guide, though it can also capture profits earlier using the 10-day moving average, depending on how the stock trades. Using my rule, one could have captured a good part of the gains made in tech juggernauts such as Amazon, Apple, Microsoft, Tesla, NVIDIA, with Amazon carrying the best risk-reward profile of the group, as I had discussed in a prior report. Younger, smaller contenders that have done well using the 7-week rule, which features more relaxed sell stops, include Zoom Video Communications, that's ZM, DocuSign, CrowdStrike, Datadog, and Fastly. Such stocks are greatly capitalizing on the COVID situation, which is boosting video conferencing, work from home stocks, cloud platforms, and online collaborations in general. Zoom, which offers one of the most seamless platforms for video conferencing, has gotten support at its 50-day all year, even in March during the crash. DocuSign, which offers e-signature solutions, enables businesses to create digitally legal documents, avoiding the hassle of wet signatures. This one's held to its 20-day exponential moving average. CrowdStrike, CRWD, they build software for security solutions. This too has held to its 20-day. Fastly, FSLY, which operates an edge cloud platform for customers' applications, also held to its 20-day. Datadog, DDOG, they provide SaaS-based monitoring for cloud applications used by enterprises. That one has yet to violate its 10-day. So with any of these names, one might look to add on pullbacks to areas of logical support. This could come as a result of, say, overnight negative news, which causes the major averages to gap lower at the next day's open. The market certainly is no stranger to that. It could also come should a shock, we talked about second order things that are coming our way. Obviously that would cause a correction of sorts. And also consider that some of these stocks they rip to the upside so fast that they're way ahead of themselves, and they're going to need to at least take a breather to digest sharp gains. And our various entry point strategies that we discuss throughout so many of our reports can certainly help an investor find good entry points into strong names. But when it comes to the stock and ETF, ETN markets, I still prefer to overweight in GBTC, buying on constructive corrections once a minor floor is found, since we are in a Bitcoin bull cycle. So its potential upside is greater than most stocks. And if we switch entirely over into the crypto markets, then it's about finding the cryptocurrencies that will outperform Bitcoin, because Bitcoin is the big blue chip, and therefore it's not going to move as fast as some of the younger names with great technologies. But keep in mind that the risk levels exponentially jump. So if one wishes to get an easy exposure to Bitcoin, then GBTC is a great way to do it. It's a convenient and safe way to buy Bitcoin on a major exchange. Now, some have asked why Bitcoin is having trouble breaking the 10,000 level. Well, I think there's 4 main reasons for this. First of all, there's these short-term sellers out there. I think at least 90% of traders in crypto are very short-term oriented, probably higher than that. And so when it gets above 10,000, there's some short selling going on. These traders are scalping some profits. So we see price resistance around that level. Secondly, there's the miners. They're selling their reserves due to the halving. So some of these miners are weak, so now that they're only making half of what they were making, they're going out of business. And this happens every time, and that eventually leaves the stronger miners. So once these weak guys have been weeded out, then this form of selling will come to an end. And this can be where Bitcoin finds a minor low in this major bull rally that started in December of 2018. So then once it breaks through the 10, well, I'm going to actually get to that in a moment. But the third reason is that the exchanges, they consistently sell their Bitcoin profits onto the market. So these exchanges are growing in trading volumes, and there is an increased flow of Bitcoin being sold onto the market by the exchanges. And finally, the Bitcoin market is relatively quiet. So such selling pressure from miners and exchanges can more easily push the price of Bitcoin higher or lower. And ultimately, we should see Bitcoin clear the 10,000 level, just as with stocks that keep testing a major moving average. Often after a few knocks, the doors open, and with limitless liquidity out to at least the year 2022, Bitcoin should not just reach old highs of around 20,000, but start on a major bull run, as it always has done after reaching new highs in prior bull cycles. Gil, how are you seeing everything?
Oops, give me a second here.
Sure.
Just checking a couple of things. Well, I think the GBTC looks like it's pulling into the 200-day line, so it looks viable to me. I don't think this is a time to be getting into this market on the long side at all. In fact, yesterday was another big shorting day, and the difference, you know, a couple of weeks ago, I guess it was. I thought it was last week. It just shows how fast time flies. But it's 2 weeks ago that we saw the market get slammed. The Dow was down like 1,800 points, and then the next day we bottomed and turned. And you've been trying to make higher highs since, and every time we move to new highs, we pull back sharply for a couple of days. So here you are on a 2-day pullback. And the question is, how far does this go from here on the downside? I think at some point you're going to see a pretty good break. It could be happening now. So all I know is I come in and take positions on key stocks at certain areas and let them go from there. And so far that's worked pretty well, because, you know, look at something like an AMD, which is essentially a failed cup with handle breakout attempt here, because you made a marginal high and you reverse. If you look at the weekly chart over here, you can see you have this cup with handle here, and it's failing. So now you're busting the 50-day yesterday, so that triggered the stock as a short sale at that point. And you've continued lower since then, so you're coming apart there. A lot of the semis are showing some weakness here, Micron, but notice how it's all the way down to the 50-day line. So that raises the possibility of playing it for a bounce off the 50-day line on a swing trade. So, you know, at this point, if you're down 2, 3, 4 days in some of these stocks, they could bounce. And I think that's what you're seeing today, but you're not really getting any kind of thrust off the lows. So I don't know, it looks tenuous at best. So I don't have any long ideas unless you're going to buy something pulling back, and I think it's pretty obvious, you know, which ones those are. If we go through the focus list, you can see, you know, Cisco Systems already broken down through the 200-day line, and it's sitting here underneath between the 200-day and the 50-day line. So then you have that, and then you have EverQuote is going nowhere fast, so it's going tight sideways. That's acting okay. Facebook is pulling into the 20-day line, so that could present an entry possibility. Fortinet, you know, you don't want to chase strength in this, so here's this pocket pivot. Not really the place to come after it, and you busted the 10-day and the 20-day. So the question is, are you going to shake out through the moving averages and then head higher? That's a possibility. But you can see this is a game you're playing here. The market's down big. We know in prior pullbacks since mid-March, since the bottom, that you get these sharp pullbacks for 2 days, maybe 3, I think at the most. I don't even know if we've had as many as 3 days. Now, for the most part, if we look at the NASDAQ chart here, we can see, you know, 2 days here, 2 days here, 2 days here, 1 day, 1.5 days here, and now we're 2 days down here. So are you just going to find a bottom and turn higher? It's tough to say, you know. So at some point, I think you fool everybody, and you just keep going lower. So I'm playing things tight, close to the vest this morning because we had some nice moves to the downside. So I take short sale profits, and now I'm sitting mostly, I have a position in the SQQQ right now, not huge, but just sitting there, and that's pretty much it on the short side. So we'll see what happens, as this plays out. But today I kind of back away. I'm waiting to see how things play out. And so far it looks like they're trying to bring it back, like they're playing the, by the BTFD bid, and trying to suck them in and roll them over. We'll see how this plays out by the end of the day. So someone has a question for you, Chris.
Shoot.
I would like to understand your comments on second order effects. How would I extract these effects and apply them? I think you're way too left-brained on that one, man. That's all I have to say.
That's it's important not to let your left brain interfere with the holistic, organic process of trading. In other words, there's lots of people who like to make their predictions, and they get wedded to these things in the face of price action. So the idea here is, if you see something is wrong with the market, the major averages are selling on big volume, lots of distribution, then you'll know what. You'll have an idea why this is happening, and let's say that the start of the gap down is due to one of the second order effects, which could be there's many of these second order waves that are coming. I mean, demand shock is going to be certainly one of them, because people don't have the spending capital they used to. I mean, the government bailout, fine, but there's a lot of companies that are really struggling. Retailers, restaurants have, the industry asked Congress for $240 billion. And that's probably the first salvo in what they need to stay afloat. So there's a lot of these ripple effects and waves that are coming at the market. And we don't know when they're going to hit and how the market's going to take these. Certainly, certain ripple effects are less than others. The market seems to be able to shrug off most of these things these days, certainly since March, since the Fed went to 0% rates across the board. The other aspect is the endless money printing situation seems to create very quick floors on the market. So even if we're seeing all these things like the rise in COVID cases, all these things that normally would be really unsettling to markets, the market seems to be able to shrug it off pretty well. But we will, when we get a major second order effect that creates a bigger correction than, say, two days down sharply, it obviously you want to be watching price volume of the leading stocks and the major averages very closely, so that you can either get short or at least reverse your longs and go to the sidelines, because as we know, this market, it's very choppy in the sense that it's not a gentle, low volatile environment. You can look at the VIX, and the VIX is still very elevated historically. Normally the VIX is under 20, but it's stayed well above 30 since March. So expect, I think, a continuation of that action. The market's sitting on pins and needles, but it's pushing on a string. But the string is a lot stronger these days, because you used to have all these global central banks, 81 of them, printing money like there's no tomorrow. And the Fed, of course, leads that charge.
Anyways, I'm going to continue with looking at the list over here. Fortinet, I'm wondering if that's a short here underneath the 20-day line, and use the two moving averages as a covering guide. I do think you're going to see a lot of volatility. I think at worst, possibly we blow up because of all this money printing. It suddenly just loses traction. And we already know that the money really isn't finding its way into the real economy. So it's basically being used to purchase assets and to pump up corporate bonds and junk bonds and whatnot. And at some point, maybe even stocks. But in any case, Intel breaking to the 200-day line. So you can see the weakness is pretty evident in semiconductors. So, that might be telling you something. So Livongo is pulling back to the 10-day line. I wouldn't buy this one here. I think the 20-day line is probably a better spot. Netflix is trying to hold this breakout, but in my view, this is extended, and I would only be buying pullbacks to the 10-day and the 20-day. NVIDIA is just hanging tight along the 10-day. And some of these you can watch to see how well they hold near-term support. You know, if you start seeing a bunch of stocks busting their 10 and 20-day lines, then you know you may have a problem here. Oracle's, I don't know what's up with this thing, but there's no trend here. It's just chopping all over the place. Now it's chopping back to the downside. Gold is pushed higher. I think right now we're trading at 1767.80 on the nearest futures contract. So that's holding up pretty well. If we get through, I think the old high is 1914 or something like that, Dr. K? I know the near-term high is just above, is like 1794, I believe, so 1798, I believe. So, you know, we'll see if it can get through there. In any case,
Yeah, I think they think 1756. I'm showing as the year high. Well, like it's higher than prior years. So I think that's where we've been. Yeah, 1756.
yeah, but if you go back to 2012, you'll see, you go back to, I think,
Oh
February.
yeah, that huge peak was all the way up to. Hold on a second.
It's 19 something.
It was 2,234. I don't remember it getting above 2,000, but according to
you're looking at something weird. I don't know what it is, but if I mean I've looked at this and it's above 19. In any case, right, near-term resistance is just below 1,800. So if you get through there, you could see things go a lot higher.
yeah,
So
no,
we still like
that was,
gold and silver.
1979. 1979 was the peak, the all-time peak apparently. But according to this, August 2011 was 2,065. Close enough.
Someone's asking about comments on the reduction in the Fed's balance sheet last week. Yeah, they had 1 week where they reduced their balance sheet, but you know, are they really going to start reducing their balance sheet? I don't think so. So it's probably a temporary pause while they find an excuse to start pumping more liquidity into the system. Because I think by the time they're all done, at least by the end of this year, they'll be somewhere north of 12 trillion on the balance sheet. So any comments about silver? Well, I mean, we can look at silver too. It's just hanging tight. Hanging along the 20-day line. It's viable at the 20-day line. So that's really all that's going on for now. But I like silver and I like gold and I like Bitcoin. So, you know, I think they're all going much higher. Here's Tesla pulling into the 20-day line. So it bottomed out at 937.15 this morning. And you'll notice also, though, that it reversed at the $1,000 level yesterday, so it actually triggered as a short. So now what I want to see to confirm this as a potential punch bowl of death type of short sale situation, I would want to see it bust the 20-day line, but it hasn't done that yet. If we look at the weekly chart, which I will pull up here, here we go. You can see you have this big V-shaped punch bowl-like pattern. To me, that's prone to a very sharp pullback. And there's been some news that their newest models have come out and there are a lot of flaws in them, and you're hearing a lot of bad things there. And you know, again, it's just a car company when it comes right down to it. So if they skip a beat or two, that could be a problem given where the stock price is. So 1,000 right now to me is your short zone, and I'd be looking to hit it up there, you know, on any rally. But right now you're sitting on the 20-day line, so if it busts the 20-day line, that could trigger it as a short sale. So, I mean, you can see the focus list, a lot of these things, there's a lot of things that look kind of garbagey. You know, here's team had a pocket pivot on Monday. Okay, yeah, big deal. Now it's pulling back into the 10-day and the 20-day. But net, it's not going anywhere. It does tend to obey the 50-day line. And then, of course, there's Tesla. So, you know, look at something like Lennar. It had a pocket pivot here the other day, but it's not going anywhere. It's just pulling into the 200-day line. So does it become viable here for a trade? Well, I guess you could have done that earlier today. So, you know, at this point, though, it's really just not going anywhere. There's nothing here. So anyways, thoughts about the correlation or lack thereof between silver and gold? No? Well, I mean, why do I need to have thoughts? You know, it's like there's too much of this idea that you have to think about everything. You know, there's a huge gold silver ratio. You know, it hit a record when silver was down big a little while ago. So, you know, it got to an extreme, but that doesn't necessarily drive me into the metal or out. So it's pointless to me. What I look at are the technicals, you know. So what you had here is a massive undercut and rally through this low. And when it did that, got it back above 13, then you could start thinking about jumping in. And I started getting in here, and now you're back up here, and you're just basing. So, why do I need to worry about the ratio between gold and silver? It's kind of like, why do I need to try and measure second order effects and their effects on the market, as if there's some sort of coefficient that you can apply to all this and it's going to yield some result that tells you how much some stock or metal is going to move. It doesn't. The gold silver ratio hasn't told people anything for a long time. Other than that, relative to historical norms, silver could be considered undervalued, but it just tells you that nobody really wants it as much as they want gold, but that's starting to change. So anyways, what else? Oh, let's see. I want to look through some of my lists. Here's what I'll do during the day. I just go through all my different groups so you can see big stock NASDAQ names. Apple's just hanging up near its highs. To me, that's the ultimate alt currency name. So you want to watch that. If it starts to bust along with Amazon, then that could have implications for the market, obviously. Baidu pulling into the 10-day line. Booking is way down there. It's kind of an undercut and rally land as it tests the 50-day line. Cisco, we already talked about. Facebook, Alphabet, Google is hanging along the 20-day line, but nothing terribly exciting there. Intel down to the 200-day line. Microsoft, another alt currency name, hanging along the 10-day line. But you can see in almost every case, you never want to be chasing strength in any of these names. You want to be more opportunistic, a little shrewder, instead of just chasing strength and, stumbling all over yourself to buy something that's sticking up there. Let them pull back. At least you have a better shot at keeping your risk under control. So Qualcomm, kind of interesting here, pulling into the 20-day line. So some of these, I would keep an eye on them because they're coming into support and they're holding. So if the market doesn't come apart, and I think we'll know in a couple hours or so, at least by the close, if we sell off again and they eat through this, BTFD type of bid here and we go lower, then, maybe you got some issues here. But a deeper pullback, I would welcome a deeper pullback because number one, it'll create some great short sale opportunities, and number two, it'll bring some stocks down into potentially more viable ranges using ugly duckling owl style setups like the bottom fishing, viable gap ups and pocket pivots and whatnot, undercut and rally moves down along the lows. Those really are your best entries, and trying to get anything after it's showing strength and becoming obvious to everyone, I think, can be fruitless. Anyways, okay, where was I? I want to look at if there's anything big moving in cloud. So if I sort them by percent move on an intraday basis, you can see Coupa Software. Come on now, there we go, making new highs. These stocks have really just done very well. And I would also watch some of these because they're getting quite extended. And when they come crashing down, they can come down pretty fast. Here's Ring Central, which is very schizo. Broke down yesterday on a big reversal off the highs, and now today it's trying to drift back above the 10-day and the 20-day line. Doesn't look all that appetizing to me, maybe more as a short here. Zscaler hanging tight along the 10-day line where it becomes viable, but also on the move above 100 finally, which it has been able to hold for the last few days. And even yesterday you closed at 108.26, so you're still well above that $100 century mark. So it's acting okay. And you'll see in this group, a lot of these things are fairly extended. Here's Box. This had a big move on Monday, and now it's pulled back in slightly. DocuSign just keeps going higher. That's been a great name. One of my favorites, actually. If you go back to late March when I was on the Benzinga.com radio show, I talked about that name. Also Coupa as stocks I liked. Work is shortable along the highs of this little range. And today you pull into the 50-day line. There's some news that Salesforce is no longer using one of their products. So, it sold off, but it finds support at the 50-day line. So now you're coming back up into the 20-day line, which could set this up as a short. So let's take a look at this on a 620 chart. You notice you're coming back up. You broke hard at the open. So that was good for a quick short. And then you stretched on the MACD and you crossed here. So you could have scalped that this morning right off the bat. Now it's turned back to the upside, and now I'd be watching to see and this is a very typical pattern, you get a break early in the day and then you drift back up towards the highs, and then if the market sells off later on, you'll see it roll over. That's what we saw yesterday in a lot of stocks. So I'll show you one name. If you follow me on Twitter, I was actually tweeting about this yesterday as I was trading it. And you can see right at the opening, you had a quick rollover. And I actually got this one off at about 54.40. And it broke down and kept breaking down all day long. And then finally you bottomed here and you drifted around. So that took a couple hours. This was a little more uniform on the short side and worked very well. And then basically the rest of the day, there's nothing going on. So, you know, go away and wait till this morning, because this morning they open it back up and they take it up to 52.50 above, well, 52.60, 52.70 on the peak. Okay, and then I saw you get this cross and boom, it breaks, and then of course then you get the rally back up. And that's usually how short side works in this market. You can hit things early in the morning, and assuming they don't stop you out, because they don't work every time. But when they do work, usually you get your break very quickly, and if it gets pretty extreme and the MACD stretches. So like yesterday, I'll get 400% short right off the open on this one and a few others that I'm looking at. And then they come in hard, and you know, I'm suddenly up 8, 9, 10% to my portfolio value. Then I'll cut out like 2/3, you know, drop it down to 100%, just take it down big. Maybe sometimes I'll even cash out and then look to re-enter on the rally. So you get the break here and you cover on the stretch here, and now it's back up into the 20 period line, also the 6 period line, and it doesn't know what it wants to do here. So it could, you know, turn and go higher, but at this point I'm not short it, so you know, we're just kind of watching it at this point. But you take that instant gratification, so to speak, and then you build your cushion and you work it from there. So you know, I got to tell you, shorting is a lot of work. And the way I have to do it now is I have to figure out where the points of inflection are. And I go in heavy at that point. In the old days, instead of coming in yesterday on the, I think it was up open, wasn't it? Yeah, and just coming in and I would maybe short 50%, and a stock started to break down, I would add to my shorts. So basically averaging down. And that was my old technique. Now what I have to do is, if I'm going to go 400% short, I got to do it at the point of inflection. And then be looking to take my profits if I get the sharp break I'm looking for. But if I don't, and things kind of feel like I'm pushing on a string, I'll just bail out and, you know, and not mess around. So here we go. We're starting to break hard to the downside. Don't know what's up. Anyways, so let's go through more of this. What time is it? 8:33. So these are the stocks, you know, that are going up. So I'm watching work. It might become a short up in here. Let's take a look at it. You're kind of getting a little bit of a doji here. So I'm just going to short a small position here. So I'll fill there at 32.54 and see what happens. But here's what I'm seeing on this. And I don't know if this is going to work. So if it keeps going, I'll just bail out. I don't argue too much. So here what you're doing is you're sort of dojing a little bit in here. You're getting these spinning tops. So you're near the highs where we opened up, you know, we rallied right at the open and then rolled over. Now you're back up near the highs of the day. So we'll see how this works out. I mean, I could be covering this, you know, at any point here. Anyways. But it's a small position, okay? A whopping 2,500 shares. Anyways, what's somebody asking about what ZI? Is that what that is, Dexter? Is Zorro India? Oh yeah, this is IPO. I don't know. I'm not going to buy this one here. I think the place to buy it. Notice how you have a low here, and then you get this series of undercut and rally moves that finally work here. So that would have been the better way to play it, in my view. Back to this list. Some other names that are interesting. Look at how ServiceNow is fluttering around the 400 level. So right now you're at 397.18. You're just below the 400 level. It could fail here and morph into a short sale. So that's something to watch for. Splunk, I think, is around some century mark, which is, yeah, right around the 200 level. So right now you're trading at 192.48. But notice how yesterday You got as high as 195.34. You haven't quite gotten to the 200 level. You got close on Monday and Tuesday, here and here. Whoop, what happened there? Here and here, and then you reverse. So, you could have come in on the short side there if you're watching your 620. Okay, there goes work. It's starting to come up down a little bit, 32.48. I'm in at 32.54. But I had a pretty big day yesterday. I think I was up 14%. And that was pretty much all short. And today I'm not trying to push anything just yet. I'm doing things in little dabs here and there. So anyways, what other name? Twilio is another one, because look at how this is hovering. You closing, let's see, well, intraday you close on the last update at 214.18. So you're above 200, but you need to watch this around the 10-day line and the 20-day line, because if it fails around the 200 level, that could also trigger it as a short sale. So, I think that you have to look at these, as I like to say, in 360-degree fashion, and not get bogged down in a, in some idea that you're going to be sit tight and be right, because in this market it's just very uncertain. And the other thing that's very odd about this market, and I see it every day, is that you'll get these sudden moves, very sharp, very rapid moves, which in the old days told you something's up and you better clear out if you're in the way of that move. Well, sometimes those moves will come and go, and they'll last 10, 20 minutes, and then they flip the other way. So okay, work is pushing against me now. So let's take a look at it on the 620 chart. Yeah, there we go. Now it's just still kind of hanging in there. Probably what I would use here is a high at 32.80 as a stop. That's probably what I'm going to do for this small position, and we'll just see. There's also a possibility if it rallies back up to the highs, I could add to the position. In other words, layering into the rally here off of the intraday lows. So anyways, let's look at some other areas. Here's Viva. That one's still acting pretty well. I mean, most of these are acting pretty well. I know that GoDaddy got slammed yesterday. I saw that one. That was pretty nasty. Let's look at just some other groups here. Semiconductors, for example. So the things that are moving today, there's almost nothing moving in this group. And you can see here on my list here, I've got 45 semiconductor names that I track myself. And you can see out of these, you've got 1, 2, 3, 7, 8 are up. And none of them are on higher volume except for Lumentum. So if we see Lumentum, but it's pulling an undercut and rally along the 200-day line. So we'll see how this goes. I mean, this could end up being potentially viable, but maybe it turns out like AMD yesterday, because AMD, which is what it's doing now, it's down $1.25. Down at the bottom of the list. You can see AMD posted a little undercut and rally yesterday, because its low is 52.11. So when it went under, that was actually the cover point intraday. That's where I was covering it. And then today you rally a little bit more, so it looks like it's going to pull an undercut and rally, and then it rolls over. So that was a short sale re-entry. Now, what makes this different than what we've seen in the past here is that when you have an undercut and rally, it's more like the traditional way undercut and rally moves used to be treated. I'd look at them as cover points and then look to short on the rally re-entry. Short re-entry, look to short that on the rallies in the ensuing rally. So that may be what's going on here as well. And definitely this morning, that's what you had as it rolled through the 65-day exponential. That's the black line I have on here. So, but if we just start at the top and look at things that are moving, some of these things are hanging in tight. So, for the most part, just a choppy group and not really getting anywhere. If I go down to the bottom of the list and see what's getting tagged, Tower Semiconductor is getting tagged. ON looks like it's starting to break the 200-day line. Western Digital has broken down through the 50-day line, so it's looking like it wants to go lower. So, you get a sense there that the semiconductors aren't looking good. Telecoms, this is a small bunch of stocks that I watch, but you can see Arista is going nowhere. Lumentum is also in that group. Sienna is not really going anywhere. Fabrinet is breaking down. F5 looked good for a while. Now it's breaking down. I think it's just below the 200-day line now. So anyways, so you get a pretty good sense just going through the groups. Things don't look all that strong. Let's go to retail. How about restaurants? Let's sort this and we'll look at restaurants, because restaurants, I think, there's hope that they're all going to do well, and that some with who can deliver will do well supposedly. But the delivery business is nothing like having people in your restaurant. Okay, people order a fixed amount of food. They don't necessarily add stuff. They don't buy alcohol unless you're going to sell them liters of beer, and I don't understand why anybody would do that. I just rely on my personal stash of vodka and some rum. So I think for the most part, the restaurants are going to have problems going forward. So these rallies, I think, along with most other retailers, make them shortable. Here's McDonald's. They announced today that they're not going to use Beyond Meat's product. And so Beyond Meat breaks the 20-day line. It's trying to get some support off the lows. You'll notice you're getting the undercut and rally right here. So intraday, but that may just take it up to the 20-day line and then it rolls lower. And if we look at the weekly chart on Beyond Meat, that's what this turkey looks like. Whoops. It had this big run up and then it blew apart. And so you have a sort of a double pod, but you never really came up the right side of this one very far before you broke to lower lows. You have a big undercut and rally type move. And now you're back up into this area of overhead congestion right here. Okay. And you're failing. So this to me becomes more of a short here. So any other questions? Let's go back. Shake Shack. Yeah, that's breaking down. Wendy's. Yeah, that's not doing so well. Wingstop. I don't know why this one keeps going higher, but it does, and it's hanging in there okay. Yum Brands breaking down. Canada Goose breaking down. So just going through some big retailers like Lulu, for example, breaking down through the 20-day line. And also this one right now is at 290.25, but it became a short yesterday. It hit a high of 303.15, and then it failed at the $300 century mark. Okay, and this is what the pattern looks like on the weekly chart. So you got this big flying V formation. You're way up here. So, and you're running into resistance along the $300 century mark. That could turn into a short. So Amazon is hanging in there, but I wouldn't be buying it up here. And we can see if we just go look at some other retailers, Crocs trying to hang in there. Decker's starting to break down. And notice it's failing at the $200 century mark. Nike is failing at the $100 century mark. I think they come out with earnings this afternoon. Is that correct? Yeah. So we'll see how that goes. Market's very choppy here, just flopping and chopping, basically. They're piling into work. That is one of the popular stocks among the Robinhood crowd. Anyways, so you can see what I'm looking at. So I'm sitting here looking around at things and deciding what I might want to short or what setups might present themselves amidst all this volatility, and then just work it from there. So I'm not right now. I'm down a dime on my work short, which is $250. So I guess there goes my sushi lunch for today. But that's pretty much it, And so I don't think there's things that you need to be jumping all over to buy. And I don't think this is the kind of market where you can necessarily sit tight and think you're going to be comfortable, because there are a lot of black swans, and you might even say some white swans potentially out there. But right now, the situation seems to be deteriorating, and the market may be coming to the realization that this V-shaped recovery is not really going to pan out. So, and then you have the long-term effects to deal with, and also all this Treasury debt. The federal government, the Treasury yesterday is going to have to, or actually, I'm sorry, Congress is supposedly agreeing to another $1 trillion stimulus bill or aid bill or whatever it's called now. And so we're going to go deeper and deeper into debt. And at some point, when does all this debt come to fruition, in terms of creating a potential black swan that even all the money printing in the world can't solve? So I know one thing, companies have, since I think over the last month or so, since the Fed started printing, they've added another $1 trillion of debt. So there you go. Anyways, that's all
Yeah,
I've got.
we've got a lot of unprecedented times here, but you know, the thing is that these situations can last a lot longer than expected, and I would say, you know, it's Dakota's phrase, "The trend's my friend till the end when it bends," and I think that there's probably, you know, well, the nice thing about massive corrections is that every time in history, before you get, you know, a massive crash, there's always a forewarning. You always see early money coming to an exit that creates the downside volume. You see it in leaders, you see it in the market averages, and you'll see this even with the second order effects as they emerge. Those to me will be buying opportunities. But when we do get that point of no return, the day of Armageddon, call it, and again, there's no guarantee this is going to happen, but if it does happen, or when it happens, then there will be signs. And you know, I think people, at least those who have been reading our articles over time, or our books, are very well aware that the risk management is the #1 rule. So you will see those sell signs. You will have your exit points, and you will be safely on the sidelines before such should occur.
Yeah, and I would say that I'm seeing some initial clues potentially. So they're cautionary. So, you know, one of the first things that will tell me what's going on is I'll suddenly be making good money on the short side, and I'll see a lot of setup. So I'm starting to see that, but it's still, you know, in a sort of an infant stage. So we'll see how this all plays out. Fascinating markets, fascinating times, but very screwed up. In any case, thanks for showing up, you guys. Enjoy the rest of your trading week, and we'll catch you next week.
So long, everyone.